Hello traders, it's Samurai Trader here. Welcome to one of my recaps on trades of the day. As stated, always my recaps are direct, raw and unedited. Whether you trade Forex, futures or stocks, the setups work on all time frames. All we're looking for is for some volatility, some market movement. What I want to focus on today is on the ES 144 tick, the after hours market, which is fantastic for those in the US and Canadian markets, and also for those day traders down under in Australia during the day. Now what we can see here, the cyan line as always is my 89 EMA. That is what gives me the trend direction. The little paint bar here signals a T1. Now that paint bar does not appear until the third candle ticks below the second candle. So quite often I'll put an order in to sell or buy at the price of the second candle, at the low of the second candle or the high. It depends where the setup is and what time of day it is, etc. So let's just have a look down here. We can see the black line at the lower part of my lower window here is a long-term stochastic. That also gives me an overall idea of where the market is heading. So what we had here yesterday on the ES 144, we had a T1 which was a lovely signal about 35 minutes 40 minutes after the market reopened. Here I had another T2. Now a T2 is where you have a stochastic oversold, the long-term oversold or about to be oversold. The short-term comes up and forms this slingshot type formation. This is a very high probability trade. So we can see here we picked up our 6 ticks, and on the 144 during the day, as a reminder, I'm seeking 6 ticks, which is $75. Let's say around $5 in brokerage, so you've got around $70. So you've got another one here. Here I marked this up because we've got a classic T10, which is also known as a money on the floor trade. Now we can see here, looking down here, and actually what I might just quickly try to do is just give you a larger pointer here. We can see here that the long-term stochastic is moving up, the short-term is kicked up, and away we go. Now coinciding with this, I also have what I call a T69. I've got a change in trend direction. Now this is against a very strong downtrend. Now our stop should have been tucked a couple of ticks below here. You would have been saved here if you had have stayed in this trade. But then we also had a T1 form against a very strong uptrending long-term stochastic. Now there's another problem with this particular setup here is this. I like to have a stop of between I like to have a stop of on average of no more, sorry about that by the way, of no more than 8 ticks. Now here if we look at the size of this candle and this one here, we would have had a good stop of probably, haven't worked out exactly, around 10-12 ticks. Stand aside. Where you get very large candles, I recommend you stand aside from the trade unless you still have a fixed stop and you roll with the dice and hope it doesn't go up and test your little swing high. So if you'd have taken that short, you would have been stopped out. Here we had another case of a 89 bounce. Now we can see what's happened here as well. If you had to put your stop up here, this is way too big. This would have been a good 3-tick stop. However, a fixed stop, you would have been fine. Now remember, your 89 tick bounces, sorry, your 89 bounces, that is where you get a bounce of the T1 off the 89, is a very high probability trade. If you had your fixed stop, you would have been just above here, you would have been fine. Down here we then actually, let me just point out a trade here that I hadn't marked in. We have another T10. Now a T10, as a reminder, is where you have the long-term stochastic sloping down and the short-term kicks up and kicks back down again, and you can see that happening right here. Now if your target was 6 ticks, you still would have been in that trade here, but because of the size of the candles, if you had stood aside as you should have done there, here I may or may not have, because I wasn't trading this market yesterday, just because it's an 89 bounce. And most people that know me know that I love these here. So you had a nice little T10 that delivered 6 ticks. Then you had a T2. Now let me just scroll along. Now the T2 is a slingshot. If you Google a slingshot, it's a classic trade. It's been around for many years. Many professional traders trade it. And you also had a T1 set up as well. So you can see here your short term has flicked up and rolled over, along with your long terms oversold, and down it went. Now here your stop would have been above here. You wouldn't have been filled or picked up your 6 ticks until you were down here somewhere. If you had have missed that trade here, you had another perfect T1 set up as well. Here you can see here your long-term stoke is oversold. You're waiting for it to flick back over, and away you go. Now we have a total change of trend here. Now what about this one? You may say, well, look, what about this formation? I had a T1, but remember, you're always waiting for your zero lag, which is your cyan line here. You're always waiting for the cyan if you're going to short to turn to magenta. Likewise here, you wouldn't have been in till here. Very, very important. You always wait for your zero lag to confirm the trade direction. So here, T2, thank you very much. Here, you're in here, thank you. And so you can see here we had, off goes the trend. All right, so you had winner. You still would have been in that trade there, by the way. Here, winner. Here you still would have been in there, winner. So you can see, by trading with the trend is your friend till it ends. And you know, it's just a fantastic setup, your T2s and T1 setups. Now what I wanted to show very quickly was those that are forex traders, the T1 and the T2s work just as well. You can see here the formation of the T1 here. See your paint bars here you would have been stopped on that one. Here. Now what I like to recommend traders is that wherever possible, the better the trade is when your trade entry is in the channel. Okay, so you can see my channel just here, the black line here, the black 2 lines, that's my 21 channel. Right, so here we had let me just scroll along a little further back here. Okay, so we had an 89 bounce here that failed. Then we had another one that was a winner, nice 89 bounce. T1. Now the advantages of these T1s when you have a channel entry is you're getting a good 2 to 1, so your risk reward is very, very good. So you only need to be, if you allow after brokerage and commissions, you only need to be right realistically 55% of the time, but you're making 50% of the time really good money on these trades. Let's go back here, back to this. Now something I want to quickly flick up before we move on is this. It's a statement they're saying it's been around for years. He who sweats more in training bleeds less in war. Now what that really means is this, that those traders that back test, that spend time on the simulator, spend and gain a lot of screen time, are the traders that are going to do much better in the medium, short, and sorry, let me get that right, short, medium, and long term. What is also absolutely critical, as you hear me say day in day out, because I'm dealing with new traders every day, is this: when you are training on the simulator, you have to pretend it is real money. You cannot use a simulator and say, well, it's just a simulator, she'll be right, mate. You know, it's only that, because you know, it's just pretend money. What happens is you will hardwire in bad habits. Now here's another thing I'd like to cover. This is part of a PowerPoint of a large presentation I'm doing in a couple of days, but here's what I state here. Let's get real. Let's address the elephant in the room. Why do more than 92% of traders fail? Well, there's one big reason, and it's called confused knowledge. This is applicable to both new traders and experienced traders. There is so much information on the chart. Now I know what the price trader is going to say. Well, all I might have on my chart is a 20 EMA for trend direction, whatever. Yes, that is correct. But if you are a price trader, or if you're an experienced trader, or even a new trader that's trading one setup, fantastic. Stick to that, because results not be meeting your expectations. Let's go back to the drawing board. Master one setup. Most of you have heard about the power of blink. There's a great book out called Blink, and Malcolm in his book talks about that you should be able to look at something and recognize it with a blink of the eye. Now what I want you to do is focus. I have following setups: the super scalp of a slingshot, the 2 to 5 candle pullbacks, and the 89 EMA bounce. Most of my clients know I have between 12 and 13 setups in total. However, as a new trader, if you're following my videos, I just want you to focus on really the T1 and T2. They quite often form the one setup, but become a specialist, become a master at one setup. And just before I sign off, if you go and join a Korean archery school, in many cases some of the best schools over in Korea, they have you actually practice shooting a bow for 3 months before you actually fire a live round. Let me repeat that: 3 months they have you practice using the bow before they actually let you fire an arrow. Remember, wax on, wax off, wax on, wax off. So traders, that's the end of my message today. Once again, stay with the trend, T1s and T2s, and you're guaranteed success.